500 on a daily chart, and we're looking at this ABC here, as you know, as wave 4. The trend line through here just comes from this point of view here, from this one here, and equal over here, coming through here. It's still playing out, still got some meaning there as well. So it was support, and now it's resistance. We do have, apart from this particular wave count that we've got here, we've got another situation, another wave count rather, that would see a move down into here first before we see a further upside here. So that's a real possibility, this situation here. If we drill in through here, it would be 4-hour chart here. If this move up here, which is still, which can be counted as a corrective price action, or it can be counted as an incomplete impulse wave. So it just needs time to develop there. But as you know, we were looking for a retest into the 1600 and the 1610, and then looking for a move down into, well, let's say just down into here before we see that further upside. So that's one thing we can have unfolding here. The other situation is that if we look at here on the hourly chart here, you know, it's just not complete. It can be counted either way, but the way that I sort of see it so far is that we can count this up for 1 and back for 2 here, this up for 1 and back for 2, up for 3. We could see this as a wave 4 here and a wave 5 to here. That would give us actually, you know, well, still a corrective count and part of an impulse wave too, in terms of the 1, the 2, the 5 waves, 1, 2, 3, 4, 5 here, and that would give us basically an A, B, and a C correction up to here. At that point, if it was going to be an impulse wave, then it would need to give us a wave 4 here and a wave 5 up through to here, then an A, B, and C here, and then further upside from there. So we're just at a juncture where we just need to allow it to unfold to work out what we've actually got here. So it's just going to be a little bit time consuming, and it can take a session or two to unfold here. So, you know, I don't know, there's nothing we can really do about it. Just allow it to unfold. If it's the same with the US 30 as well. This particular line through here is just a line that's come from this point and this point here, and I figured that, you know, it would give us some grief at this point here, which it has, and you know, we can just bring this here, the 14,900, obviously this is where this is playing out from, but look, once again, it's got the same wave structure up that it could be counted as an A wave to here, a B wave to here, and a C wave to here, and fail from this point here. But look, I just feel that we just need to give it some time now. But if you're trading long, then this is the point that you would get out and then just wait and see what develops, and then once that's established, then we can move back in from this point here. So as you also know as well, the 15,000 here would give us resistance as well, but I can just see that in this little structure here, we got 5 waves up here, so there will be some type of, you know, corrective pattern or failure from the 14.9 here, and like I said, we just need to allow that to develop. Now, obviously the FTSE and the Australian market have a bit of a relationship there, and we were counting 5 waves down as we were, and we felt that we'd get a bounce off the 6,000 through here. So really, we need to see a retest. A normal retest would be the 61.8% once we got 5 waves down. So we'd be looking up in this area through here. But we need to be mindful that this block here of price action would come with the most volume as well. So that area from the 6.3 to the 6.4 there would be resistance as well. Obviously, the FTSE also follows the Dow as well to a point. So whatever happens in this short-term run up through here will be in line with the Dow as well. It's a little bit early to point out any sort of impulse wave here, but we can certainly see that we've got a three-wave structure to this point. But what we'd be looking for would be a five-wave structure, because we would expect it to move, further up. So let's just see how we go with that. But be mindful that this is in three waves and a 5-3-5 structure, and it can fail from this point here. So we're looking to be long above the 6072 and the 61. This is the point to exit here, and let's wait and see what we got. Even if we do get another push up through here, a corrective move to here, and then another push up to here, then we'll still see an A, B, and C across here, and then we'll look for support here. So, there's really sort of 2-3 sessions before there's a setup again for the long side there. So, yeah. A bit of patience there. The Australian market's a little bit the same as well. This is the move off the 4600 here. On the cash market, we would be where it's a bit sort of cleaner on the wave count. We would look at this in terms of the wave structure. We would look at it on the cash market. We'd be looking at it as a wave 1, a wave 2, and then a wave 3 up through to here, a wave 4, and we still need to see a wave 5. So on the cash market, we would need to see a move above, let's see where we are here. We need to see a move above this high here. So this structure here would be something like this. Like if we get, so from that would be wave 1, wave 2, this is the top of wave 3 here. We need a wave 4, which is already pulled back through to here. So we need to see a wave 5 up here, which is highly likely looking at the US markets overnight. Once that occurs there, that will be at the minor trading level 8. So that will give us a little bit of resistance there. So we can expect to see some type of corrective pattern at that point. And we need to be, with our robo trades as well, is that this corrective move that can occur here, can click out some of our stops, but we could, or you could have wider stops once we're clear that we've got this 5-wave price action from here, because if that's the case, then we'd be looking at another 5 waves up from that point there. And this is driven by the banks as well. This low here, coming in here under this low here, we kind of expected it here, but it hasn't really occurred on the banks. It's only occurred on Macquarie. But it hasn't occurred on CBA, ANZ, WBC, and those sorts of things. So a little bit of a different there, but it will lead from that. Right. So that's that. Of course, if you're trading this move's already sort of been priced in. The other number here that's important is the 4772 here. It will carry some weight. This appears to be a corrective pattern through here, so we should see further upside. That looks like impulsive pattern here. So we got 1, 2, 3, 4, 5 to here, back for 2, up for 3, sideways and complicated for 4, and ABC coming back. So we should see that, that push higher through there. You'd have to keep the stops under here at that point, I guess. But being into the 65 there, you can add there and also add on top of the 72 there, and also add on top of the 80 with the idea of starting to scale out at 90 and above. Alrighty, let's have a look at commodities. Okay, we can start with oil today, and yes, well, as you know, we've been looking for a B wave back up to the 61.8 area up through there at the sort of 69, 96, sort of 70 area, and we were looking for this first move up here. Was an impulse wave. It's got 5 waves, a nice third wave in the middle here, and a fourth and a fifth. So then we'd class that as wave A, and then we're looking for a wave B to come back. A wave B normally retraces 61.8% of the A wave. Oil can have spikes. It can be a bit headline driven. So yeah, it's what it does, I guess. So wave C to the upside here, the distance of wave A sometimes has an equality with wave C that would take it just above the 61.8 retracement level through here, but we are looking for wave C of B moving up there, and that will be in 5 waves moving up. We kind of have 5 waves already, but it seems a little bit sort of small there. This is just on the 5-minute chart here, and if we move this into here, then you can count those 5 waves there, the 1, the 2, the 3, the 4, and the 5 to that point there. So it can certainly fail from that point. If I bring this back here once again, this 5 waves here would probably be 61.8% of that there, and that can be some sort of equality point as well. But look, if that is 5 waves moving up through there, as such, if that is 5 waves moving up through there, then we'll have a correction, and then we'll have another 5 up, and then another 5 up. So we could end up quite sort of high through there. So you'd be looking for long trades above that. If this, because of this 1, 2, 3, 4, and it does appear to be a 5-wave structure in there, so it should correct from here. But of course, if it doesn't, then buying that new high there would be what you'd need to do as well, with a stop under this point here. So otherwise, expect an A and a B and a C across here, and then upside from that point there. So the copper market, there's not a lot to report here. You know, the situation was that you know, as I mentioned the last few days, as it's coming down through here, it's just going to get, there's a series of waves, fours that will come into play, and you know, it will edge lower, but there will be support here. This support here will offer support for the BHPs and the Rios of the world. So yeah, the gold's the more interesting one, of course. So this is just the weekly chart here, and you know, there's further to go down through here, and normally once it finds, you know, the halfway between 1,000 and 2,000 is the 1,500, of course. So, you know, once the market's under that, then the bias is towards the next largest number, which is here. Once it enters group 1, which would be the 1,300, 1,200 and the 100. Once it moves into here, it starts to bounce around a lot. So this is the first bounce off here. This, when it hits the 1,200 here, then we can expect it to bounce back into the 1,300 here, retest that trend line, and then move down and bounce here and so forth, and you know, all this sort of stuff. You know, it might be smoother than this, but that's, expect that in group 1. Okay, so in looking at this closer here, this is the daily chart, and as yesterday we were looking at the 72 number here being the support. Well, that's obviously dropped out of bed. So and this is the wave count here. So from this high here, we're looking down for wave 1 and wave 2 here, down to wave 3 here, and in wave 3 here there will be 5 waves, and those 5 waves would be the 1 here, the 2 here. I still think this is folding down here for the 3, the 4, and the 5 coming down to this point. Then there'll be a 4, and then there'll be a 5 here. So we can take that probably down here further, but let's just see how we go. Commodities can extend in the 5th wave just as easily as they can in the 3rd wave, where stocks tend to more extend in the 3rd wave. So, you know, it can extend down further, but, and of course, if we're thinking of 1,000, then yes, we can get a bounce, but we also have to include the next level under that, and that's 800. I know that's a fair way away and all the rest of it, but that's what we have to do, because when you got major trading level 1 here, you need to bring in group 1 and the next level down, which is the 8 here. But obviously that's a long way away, and we don't need to concern ourselves with that just yet. We will experience a bouncy, choppy market as this moves down into trading level 1 here. On the smaller scale here, this is sort of how I see the count. So we're coming into wave 3 here, okay? And once we get wave 3 here, wave 4 should bounce back to the wave 4 of 1 lesser degree, which is the 1300 there. Once that's done, then we can move down. Now, wave 4 can be a bit complicated. They seem to have the same sort of pattern, really. So this little pattern here, see that little one there, that's really the same as these sort of larger ones here, these sort of wave 4s here. So don't need to see it there, but yeah, so they're basically, what they do is they've been coming up, and then when they've been up here, they've been, you know, sort of suffering, I guess, and they've taken a while to unfold to the downside, and the same with this one here as well on the 4 hour. So this is what we can expect again through here as well. So, but look, anyway, 5 waves down for 1, back for 2, and then the 5 waves in the third wave here, extending the 1, the 2, the 3, the 4, and the wave 5 here. That's the 4 hour chart. If we can drill in here a little bit, we can see from the 20-minute chart here, from this wave 4 here, we can see this is a reasonably clear 5 waves down for 1, and we're looking at this yesterday as an A and a B and a C for 2 here, and then down for 1, back for 2, 3, 4, 5, third wave here, fourth wave here, coming down for the 5th wave here. It doesn't have to come this far down, of course, but it may only come down to here somewhat. So let's just have a little look here where we're up to here. Well, we've got down for 1, back for 2, 1, 2, 3. We could be very close here because we've made a low under here. That's all that it requires to do. So if it finds support on the 1230, then you can consider it sort of underway at that stage there. The silver market's the same as well. Obviously, we were looking being short under the 72 here, and if that's the case, then you would also, well, depending on if you're still holding short here, that's fine. You just have to work the midpoint here next if you've missed this one here. Let's just have a look. 1, 2, 3, 4, 5. We should make a new low under through here as well in this particular case here, because that move up there is in 3 waves. So we should make a move under here, just sort of seeing, and that would take us, we got this move down through here as wave 1 and 2 across here. So this has still got further to go down, and 1800 would be the next level to the downside here. So that's what you'd be looking at. But you also know that 10, 20 and 30 are going to slow the boat down somewhat. If you're shorting from here, look for the retest, failed retest on the midpoint of the 50 here. Alrighty, let's have a look at FX, as there's a possible short trade in the Australian dollar now. Okay, the US dollar. Okay, so there's a couple of wave counts for this, and it just makes it a little bit confusing. So we're just going to simplify it by using the trading level here, and the trading level is 83, which is a minor trading level, and it's also the top of minor group 1 as well. So as mentioned before, support on this here would see the market at 85. Now, in terms of finding support here, the normal process is the classic trading levels pattern, which would be the arrival to here, then the reaction, finding support, and then creating the first high above the level, and then having an A, a B, and a C wave coming into play, maybe down to the 82, and then looking for the move to the upside if this move here is in 3 waves. So that's what we're sort of looking for there. So this move here coming up through here can be the first high above the level. And normally, if I'm wrong, then finding support on 83.30 is, if you find tested support on that, and tested support would be the same picture I just drew then, but on a smaller scale, that would be up there, first high above the level after the sort of reaction there, first high above the level, some type of little ABC correction here, and then finding support on it through there, taking the long trade like this through here, and that's how you deal with that if you're if you're wrong. But the other way is looking at this here. So in counting this up through here, it does count quite nicely so far as a little wave 1 in here. the 1, 2, 3, 4, and 5 here for wave 1, taking this as wave 2 here, but wave 2 could be here. Not that it makes a lot of difference. Then we've got, well, it does really, but anyway, the 3, the 4, and the 5 here. If I'm wrong here, then the other count would be up for 1 here, back for 2 here, 3, 4, and 5 here, just for the top of the third wave, the fourth wave, then the fifth wave to here, and then the failing from that point there. So that's logical as well. So you just need to chill out a little bit while it does its thing here to see if it just drops straight from here or goes to here, then drops from that point there. But no sort of major points there for that. But yeah, so anyway, that's what we expect. We're looking at the classic trading levels pattern across the 83 here. Once that's completed and we've got support, then we can go long here and short again on the euro at that point. The euro, yes, the euro here. Okay, the bigger picture here. The weekly, so we've got this trend line support through here, so this market's likely to come down somewhere in amongst here. Once it does that, we'll be looking for, we're in wave 1 here already, wave 2 back to here in 3 waves, ABC, and then we're down here for wave 1 here, looking back for wave 2, and then down for wave 3. So there's going to be some good short trading going on here if we're correct. First of all, getting some short trades up through here. Also dealing with this situation here, what happens with trend lines is that when we've got a trend line as such through here, what happens in terms of price action is that the market would come down, hit it, come back through there, eventually pop through there, and then come back and test it at that point. And that's the point where we look for weakness and sell it at that point down through here. And of course, you can get it here. So there's a whole range of opportunities to build in a short trade through there. And it's good to have, well, everybody's got their own sort of way of doing things, but it's good to have positions at different prices, because that way you can lay them in and you can unfold them, you can remove them as necessary, and this really helps manage the risk this way as well. But look, a great shorting opportunity could arise from this point here. In tracking that, this is what we're looking for here. We're looking for wave 1 to the downside in 5 waves, then we're looking for wave 2 to come back. It's a good opportunity because it would be the third wave coming down here, but it would be the third of the third. And what I mean by that, we're in wave 2 here already, coming into wave 3, and this would be wave 3 here, and this would be wave 3 here. And then, as I mentioned with the trend line just a moment ago, a move down here and a move back up to here would also be wave 3. So we'd be looking at the third of the third of the third, and that would be a very powerful point in the structure there. So that's something that we can look forward to a little bit further down the track over here. Just drilling into this here, look, from wave 4 here, we're looking for 5 waves down for wave 5 here. They may not be complete just yet in terms of from that wave 4 here, we're looking for wave 5 to come down of wave 1 here, then A and a B and a C back for wave 2. The euro normally has shallow retracement levels, and also because we're coming into wave 3 of 3 and so forth, the rallies will probably even be shorter as well. We've kept it short at the wave 4 of 1 lesser degree, but normally they would be the 61.8% from that high through there. So that point there down to wherever it comes to here. So we'll be back up in this area through here. But as you know as well, this block here is supply. This block here is supply. The market will move up to this point up to here and have some sort of reaction in here. Well, even from here and even from in here as well. So, it's there's a lot in here. So there will be lots of reaction. We need to work through that. But if it finds support here, then it'll move into this area over here, where the second lot of supply would be through here. So, but it could be up here, but it's more likely to be in this area through here. So that's what we'll be looking at. So this move coming down through here, it could be finished at this point here. We bounce up. I just think there might be one more little move to the downside in that, and this is just the 5-minute chart here. So coming down from that wave 4 there, it does count quite well in terms of a little bit rough in here, but basically down for 1, across for 2, 3, 4, and 5 here for wave 1. Back for wave 2 here, and then we can count 1, 2, 3, 4, 5 for here for 1, back for 2 here, nice third wave here, fourth wave back in 3, and then the fifth wave down here for the fifth of the third here. So I think that we may be just in the fourth here, and then we'll get another fifth wave down through to here, and then we'll get our bounce from that point there. So just be mindful of that. If I've got it wrong, then we'll be going straight up from that point there. It doesn't matter if you miss these either way, because we are looking for for this rally here, this ABC rally here to short. Now, the Australian dollar, we were looking for wave 4 to pull back up to the 93.50 area there, and that's pretty much sort of played out already. So, we could see it failing from this point here. If we just drill in for that for a moment. This is just the 15-minute chart here, and the rally that we've been looking at through here, I've just got it panned out like this. So the third wave, the fourth wave, the fifth wave here, and then we're looking for an A wave, a B wave in a triangle, the A, the B, the C, the D, and the E here, and then up for 1, back for 2, up for 3, 4, and 5 for the C here. And then it does appear that we've got a 5-wave structure to the downside for wave 1. So that top could be in place now, and now we'd be looking for an ABC correction from here, some type of corrective move from here. If that's the case, then we can start to look for short trades here. So there's quite a few ways you could do it. You could just short it from in this sort of area through here. If that's the case, then you've got to put the stop above the last high here. The other way to go about doing it is allow this to play out through here. And if all that comes to pass here, then we'd be looking for this number here, the red line, the 92.72, to become the retested resistance, and then you can put the stop above the last high here and look for new lows at this point here. So the wave count for this is actually quite good, but the intermarket relationship, say with the S&P 500, there has been a correlation there on the hourly chart for a little while. So we would also need to see the S&P 500 roll over from that point as well. The other point is that if the US dollar does, the first high above the level that we're talking about and a move down, then the Australian dollar and the US dollar moving down together, it can happen. But the interrelationship play between the other markets is not really supporting a short trade through here. So make sure that that 72 is your retested resistance, and it can be a bit tricky to understand and work out, but it's like this move down through here. It came through here, and look, if you got it wrong, well then that's fine. Just get out again. But what you're looking for is a really clean, failing at that point. This is quite a good failed setup here. That's an error really in terms of, so if I was looking for this to move down, it's moved down through here, it's come back and retested it, it's found that it's resistance here, so I would have shorted it here, and then it's moved, well, even shorting it under here, breaking a new low here. If it moved back up through here, then I would have just gotten out at that point. That's what I would have done. So you're looking for that retest to fail, and if you're wrong, well then you're wrong and you move on. So that's what we're looking for over here. But you can get it, you can do it, you just need to know what you're doing here. This move up through here so far, that would be a little, can we just have a look at that actually? Let's just go in there, and it does appear that we're getting a little 5-wave structure there, even though it's not finished just yet. So that would be, well, that's not quite true. This, as it stands at the moment, that's can be counted in 3 waves up. So that could be it there, but this correction is a little bit small in relationship to this 5-wave structure to the downside here. Okay, so what we would be looking at here, I guess, would be the 1, 2, 3, 4, and 5 making a new high here, then the A, the B, the C wave, and then another 5 up through here, and then failing at that point there, and then moving down from, well, you know how it goes, bounces around a little while, and eventually finding that 72 there as the resistance. That's what you're looking for. Sure, you can build trades in through here, but once that high's in there, and if you're building into here, then the stop needs to be above here, and if that gets taken out, then you need to be moving out with it as well. Alrighty, well, that's enough waffling on. So that's all good. Yeah, so look, the just sort of recapping a little bit, what we want to see in the Australian market, which is a bit different from the US market, is that on the cash market, we want to see a move to the upside to create the first impulse wave to the upside. So on the cash market from its low, just like this little pattern here, we've got this move here, we've got 1, 2, 3, and we've got this 4th wave back. Today we want to see a high coming through here on the cash market, the ASX 200. Once we do have those 5 waves here, then we'll know we'll get a counter trend and another 5 up, and that will keep us busy to around on the long side until next Wednesday, and we can see what we've got as that develops from that point there. So that's the likely scenario. So we do need to stay long. The thing that could get in the way would be the S&P 500 failing at the 1600 there. So we'll keep an eye on that as well. Alrighty, well, good luck and enjoy the day ahead.